Hi there, welcome to kneppyinvests. In this video, I'll be talking about a company that I thought I had never heard of before. Well, maybe not thought of, but I definitely had never heard of Acumentis before. So I thought they were a recent IPO, but they're not. In fact, this company formed in 1982, and they did an IPO quite a few years ago under the name Landmark White. Then Landmark White went through some serious issues in 2019, like a cybersecurity attack on the company. And the best way to deal with that, management decided, was to change their name to Acumentis so everyone forgot all the issues the company went through during that year. And it sort of worked because I completely forgot until I started to do some research on Acumentis. And I've noticed this is happening a lot. A lot of companies do change their name on a regular basis. There's one company I've been following over the last 7 years has changed their name 3 times. And every single time they change the name, I just have to get my head around the new name of the company. And it doesn't work because as soon as I get my head around the new name, I realize all the issues the company has gone through. So let's look at this company. I've mentioned they are a cheap company, and when you look at some of the financials, they're definitely cheap, but I think there's still a lot of negative sentiment around this company. So let's get into some facts around Acumentis. The ticker code for Acumentis is ACU. Now, they did change their name, as I mentioned before, from Landmark White to Acumentis. And the one positive thing about that is I do think, in my opinion, Acumentis is a much better name than Landmark White. That's just my opinion. But really, a name of a company doesn't really add or detract from what they do. Maybe. Now, I might have to do a little bit of research on that. Maybe I'm completely wrong. So if I am wrong, you do know any research that's been done on companies' names and the effect that has on how good they perform, leave in the comment section. I'd love to hear that, in fact. Market cap of only 20 million, and when you compare that to the fact they have revenue of $43 million in financial year 20, and they were operational cash flow by 6.1 million, means they are looking quite cheap. In fact, the enterprise value to operational cash flow for that year was only 3.8, and that's significantly lower than 6. And 6 is my sort of benchmark for a cheap company. Anything under 6 is a cheap company. So if you want more information on Acumentis and their Appendix 4C, they released that report on the 13th of April. So what does Acumentis actually do? Well, they are a property valuation and advisory firm. So if you want property evaluated, Acumentis is one of the companies you could go to. They have 45 offices throughout the country, and they are expanding. They recently expanded into Bendigo, Victoria, and early this year they went into Tasmania. So it looks like they are covering most of the country at the current time. Now, they did IPO on the ASX in 2003 at 50 cents. So if you've been holding onto these companies since they IPO'd, you've not done very well with this company in your portfolio. So in fact, the share price has gone down 66% or something like that. Now, just because this company has not succeeded in the past doesn't mean it won't succeed in the future. So past success or failure is not a predicting force for the future. You never know what might happen. This company could get new management who are absolutely awesome at what they do, and this could be a massive success story in the next decade. And this is why I keep an eye on most companies on their ASX, because you never know where the next success story could come from. Now, in saying all that they are cheap, operational cash flow positive, this quarter did slightly disappoint me when I looked at it. So I did have some expectations in regards to receipts from customers, and those expectations were not met. So only $10.7 million in receipts was a little bit down from previous quarters and a little bit lower than my expectations. And because it was a little bit down from my expectations, it meant they were not operational cash flow positive for the quarter. In fact, they were negative in operations in cash flows by $312,000. It also meant that cash on hand has gone backwards for the quarter from $3.2 million to $2.7 million. So even though they are cheap in my books, when you look at the full year financial numbers, this quarter did disappoint. And this is the cash receipts for Acumentis. Going back to 2019, October that year, we did see a bit of growth there, particularly from April 2020 into July 2020, going from 8.3 to 14 million. But ever since that peak in July 2020, the cash receipts has slowly gone backwards. So that is a little bit of a concern for me. I'd like to see receipts going up, a bit of an uptrend developing there. So this is one reason I am staying a little bit clear of this company right now, just because the trend in receipts is not there. And there might be a reason why the company is looking cheap at this point in time. And compound quarterly growth rates in receipts since 2019 October that year is only 3.5% per quarter. But if you go back to July 2020, receipts growth rate is negative at this point in time. Onto the charts for Acumentis, and we'll look at the weekly chart first, and then we'll hone in on the shorter term and look at the daily chart in the next slide. So when you look at the weekly chart, you can definitely see a major downtrend from 2018 into the start or middle of 2020. It includes the real big issues they were dealing with in 2019. In fact, you can see two big gaps in the share price during that period, and that's because the share price of Acumentis was in a suspended state during those periods. And I think definitely one of those periods was because of a cybersecurity attack on the company. So during this period, 5-year period, the share price was at a high of 55 cents in the middle of 2017 and a low of about 7 cents during the COVID-19 financial panic. Now, the best thing to say when you look at this chart was the downtrend that continued through 2018 and 2019 was broken in the middle of 2020 at around 10 cents. And ever since the downtrend was broken, the share price has been going sideways. So whenever I see a sideways movement or a consolidation period with the share price, what I'm looking for here is a breakout to the upside or the downside, and that should be the next or the beginning of a new uptrend or the beginning of a new downtrend. So in these sort of situations, you just have to remain patient. There's no point buying into a company where the share price is going sideways. Just wait for the breakout in the share price. And onto the daily chart for Acumentis, and to be honest, this chart does not excite me at all, and the main reason I would not be buying into this company. When I look at the candlestick action on the top, it's quite sporadic, which suggests there's not a lot of liquidity when it comes to Acumentis. And you can definitely see that in the volume on the bottom there. You can see big spikes in the volume, so that's probably one or two traders buying en masse. But what we're seeing over the last 3 or 4 months is the share price has been consolidating between about 11 and 13 cents. And what I'd be waiting for with Acumentis is a breakout to the upside with positive news, high volume, and share price increasing. So that's what I'll be waiting for here. Up until then, no point buying into the company. You can just be patient, waiting for confirmation of a breakout to the upside. And that's all I've got on this video for Acumentis. It is indeed a cheap company, but it could be cheap for a reason. And when you look at Appendix 4C and the charts, nothing to be really excited in those. So what I'll be looking for in the future with this company is some positive news filtering through, maybe some new contracts, maybe a good acquisition, some good financial news, operational cash flow positive to the high side, that sort of thing. And if that does happen, that positive news flow does come through, we should see the share price and volume increasing on that news. And that's the time you would buy into this company. Otherwise, just be patient and stay out until you get that confirmation of a breakout to the upside. If you completely disagree with me about all this, make sure you leave a comment in the comment section. Any sort of constructive criticism, I will take on board. If you have any sort of destructive criticisms, keep that away from these videos. It is of no use to me, no use to you, and no use to anyone else as well. Now, I'm not a financial advisor, so if you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.